let's dive straight into the NSDL stock. Look, if you follow the Indian capital markets, you already know National Securities Depository Limited is a foundational giant. I mean, we're talking about the literal vault for a massive chunk of India's electronic securities, holding trillions of dollars in assets. But lately, well, its stock chart is turning a lot of heads, and for a very specific reason, a massive, sudden drop. So in this explainer, we're going to unpack the data to see what's actually going on beneath the surface. Now, before we get too deep, a super quick disclaimer. We are here to objectively analyze the data, not to give financial advice. This explainer is strictly for educational purposes only. Definitely not a buy or sell recommendation. You know the drill, everyone's financial situation is totally unique, so please chat with a registered financial advisor before making any actual moves. Our goal today is just to bring some much-needed clarity to the numbers and the overall market structure. Okay, so what grabs our attention right off the bat is this dramatic correction in NSDL's share price since its listing. We saw these impressive highs of around 1,100 rupees, right? But from there, the stock has just cascaded downward, correcting all the way down to the 800 rupee level. To put that into perspective, in the world of investing, a drop of that magnitude in a major established company always triggers a flashing radar. And this sharp decline naturally leads us to a massive question. Are we looking at a rare chance to buy into a market leader at a steep discount? You know, holding a falling stock is an absolute emotional roller coaster, and it shakes out a lot of retail investors. When a heavy hitter like this drops, the market usually splits into two camps. Some see a falling knife that they want to stay far, far away from, while others, they see a golden ticket just waiting to be scooped up. Building on that exact thought, the big buzz right now is whether this stock has the potential to multiply wealth over a 3 to 5 year horizon. Like, could this correction just be a coiled spring, setting NSD up to become a genuine multi-bagger? That's the super compelling narrative floating around the market right now, and it's exactly what we are going to test against the facts. To answer that, we'll be structuring our explainer around 4 key areas: the fundamentals, the technicals, the trend, and finally, future outlook and strategy. Starting off with part 1, the fundamentals. Let's break down NSDL's core business. What makes this company so incredibly robust is its highly efficient asset-light business model. Since they act as a depository holding electronic securities, think shares, bonds, ETFs, they don't have to build expensive physical factories or deal with massive warehouse inventory. It's virtually all digital. This lean structure means they generate super regular, predictable cash flow. Couple that with a brand value that is pretty much universally recognized in the financial sector, and you've got a company that is a direct, undeniable beneficiary of any long-term growth in the Indian capital markets. The logic here is actually wonderfully simple. Think about it. The absolute explosion of new retail investors setting up systematic investment plans directly fuels NSDL's expansion. As equity investing in India takes off and literally millions of new demat accounts open up, infrastructure providers like NSDL scale right alongside it. Their growth isn't reliant on hitting a home run with a single new product launch. It's permanently tethered to the growth of the broader financial ecosystem itself. Moving on to part 2, the technicals, let's chart this correction. Looking closely at the price action, we are currently tracking a potential double bottom formation. Now, if the price can break through critical resistance here, it could signal a medium to long-term bullish reversal. Essentially, it tells us that buyers are finally overwhelming the sellers who have been dominating the narrative since the stock hit its peak. It's like watching a classic tug of war playing out right in real time. But, and this is absolutely crucial, a pattern without volume is honestly just a drawing. We need to see aggressive buying volume validating this breakout to prove that major institutional money is actually stepping in. Until we see that heavy volume confirming the push past resistance, it's really just a potential setup, not a guaranteed upward trend. So definitely don't jump the gun here. Which brings us to part 3, the trend. We have to understand the broader market cycles. So that initial downward momentum from the 1,100 rupee high, it's visually flattening out, which shows us that buying interest is gradually increasing at these lower support levels. NSDL stands to benefit massively if the broader Indian bullish cycle continues its upward march. But, and keep this in the back of your mind, if the broad market takes a massive hit, even fundamentally flawless stocks are going to correct. Market cycles matter, and even a dominant infrastructure player will feel the heat if the broader indices take a sudden dive. Finally, part 4, future outlook and strategy. Let's look at the multi-bagger checklist and what the next steps are. For NSDL to actually hit that multi-bagger status over the next 3 to 5 years, a specific sequence of conditions has to align perfectly. First, the company must maintain completely consistent operational performance. Second, the broader Indian stock market needs to keep up its rapid trajectory of growth. Third, we need a continuous aggressive rise in demat accounts and retail participation. And lastly, all of that has to seamlessly translate into sustained profit and earnings growth right on NSDL's balance sheet. When all those puzzle pieces click together, the probability for immense long-term returns goes way up.
Okay, time for a quick reality check though. There is absolutely no guarantee of a stock becoming a multi-bagger. Nobody has a crystal ball, right? Every single investment carries inherent risk, and the macroeconomic landscape can literally shift overnight. A strong fundamental and technical setup is exactly that. It's a setup, not a promise. Because of that, long-term investors should absolutely avoid making hasty, rushed decisions based purely on chart hype. You've got to focus strictly on those core fundamentals, make sure the valuation makes sense for your specific portfolio, and implement solid risk management. If you firmly believe in the long-term structural growth story of India's financials, you might want to look into a staggered buying approach or a systematic investment plan strategy. Just build your position patiently over time instead of throwing all your capital in at once on a whim. So now that we've broken down the fundamentals, checked out the technical patterns, and mapped out a rational strategy, I want to leave you with this final thought to ponder. Considering the massive structural shift happening in India's financial landscape right now, alongside this major recent price correction, do you think NSDL has what it takes to become a spectacular long-term performer in the next 3 to 5 years? Weigh the risks against the potential rewards and let that guide your strategy. Thanks for joining me for this explainer. Keep your curiosity sharp, and I'll catch you on the next one.